Once again, thanks for tuning in. Holly Shields here for kalkinemedia. Let's talk store of value. Before we get into it though, please give our channel a sub and hit that bell icon to stay ahead of the game. Store of value is the value that measures a product or asset's capability to retain its store value. Therefore, a store of value helps to retain the value of an asset without depreciating it. Usually, those assets that can be easily converted into different forms and last longer can serve the store of value. In addition, assets need to fulfill certain eligibility criteria, like whether they can be saved, retrieved, preserved, and exchanged at the cost of their purchasing price. Such items include gold, US Treasury bonds, etc. Commodities that are perishable have a low shelf life, cannot serve the purpose of the store value. One such commodity is milk, obviously. So how does it work? Well, the main concept behind the store of value is risk aversion. That suggests that prices and value of assets will always be retained if the demand is of the underlying item exists. For instance, commodities like gold and other precious metals, their value can be easily restored as they gain utility due to their long shelf life without shrinking their value. Additionally, the assets that bear interest, like the US Treasury bond, are also considered a store of value because they restore their value while generating income over a long time. Therefore, a store of value must always be either a commodity, currency, or asset that can be easily stored and retained over a long time. So, what are the different types of stores of value? Well, first you have precious metals. In earlier times, the world has witnessed people possessing gold, silver, copper, etc. as currencies. This used to happen because precious metals are capable of restoring value. Therefore, it was easier for people to carry such currencies and exchange them for other denominations. Moreover, the US was said to be in the gold standard until 1971, which interpreted that the dollar was allowed to get exchanged for gold. Another type is currency. Currency is a rightly justified form of the store of value. A stable currency that acts as a healthy element of a nation's economy can be a wonderful example of a store of value. It's one of the most credible assets of a country for citizens to earn, spend, and trade money. The value of a nation's currency can also be retained over several years. Now, let's not forget cryptocurrencies. These days, even cryptocurrencies are included in the list of store of value, as economists have come to believe that even Bitcoin and Ethereum can store value for a long time. They possess qualities like scarcity, divisibility, decentralized security network, and a holder of transfer of value that rightly identifies the cryptocurrencies as an excellent example of store of value. Cryptocurrencies can be defined as a type of virtual currency that has no actual existence. It's non-tangible, and unlike the paper currency that is usually used for the day-to-day transactions. This currency can be used for purchasing goods and services. However, the authentication of such currencies and transactions are purely conducted through online mediums. There are over 6,500 different types of Bitcoin currently trading in the market. Let's check out the 5 most popular ones. Bitcoin. Bitcoin is one of the most prominent types of Bitcoins, obviously. Also known as the main source of Bitcoins, developed in the year 2009. Ethereum. The second largest value that came into the market was known as Ethereum. It was developed in the year 2015 as an alternative to Bitcoin. Ethereum helps in tracking digital transactions. XRP. XRP is an open-sourced virtual currency. It was developed as a virtual asset that helps in a digital transaction. Tether. Volatility is a challenge that's frequently faced in the cryptocurrency trading market. Tether was created to offer a stable option of cryptocurrency to investors who prefer trading them. This helps to make the market smooth and free from price fluctuations. The price of Tether cryptocurrency is directly dependent on the value of the dollar. Litecoin. Litecoin was again developed to offer an alternative for Bitcoins to the investors of the cryptocurrency market. It turned out to be faster than Bitcoins with respect to the transaction speed and soon gained popularity. And that concludes our list. If you like this info, please give us a like, share, and a comment. And for regular updates, head to our website at kalkinemedia.com. This has been Holly Shields for Kalkinemedia.